A very good afternoon, dear students. The thought of the day is every day do something that will inch you closer to a better tomorrow. That, as I already said before, it also that how slow you are does not matter until you never stop. So keep trying until you are not able to achieve your goals. I hope you all are safe at your place. I, Professor Sonal Agrawal, welcome you on the digital platform of Agrawal Vidya Vihar English Medium College. This is a lecture for the subject Indian Banking and Currency System, Paper 5. What we did in the last lecture we have discussed the different functions that is to be performed by the commercial bank along with the basic of commercial bank. In that we have discussed the types of the bank also in brief, that the commercial bank is bifurcated into the two categories, that is the non-scheduled bank and scheduled bank. Scheduled bank is registered under the second schedule of RBI, and non-scheduled bank is not registered under the second schedule of RBI Act. Scheduled bank can be further bifurcated into the public sector bank, private sector bank, and foreign bank. And the public sector bank can again bifurcate into the category of primary agricultural credit societies and state cooperative credit bank and the central cooperative credit bank. After that, we discussed the functions of commercial banks, that commercial bank is accepting our deposits. At the time of need, they are granting the loans. They also provide the overdraft facility to the customer. They also provide the discounting facility for the bills of exchange if the customer require money before the maturity date of bills. They also investing the funds that you are giving to the bank in the form of deposits. They also provide so many types of agency functions for the customer, and along with the agency function they are also performing some of the miscellaneous functional for the better satisfaction level of the customers. This all we discussed in the last lecture. Now today we are going to start with the topic progress, or you can say the development of commercial bank in India. Here we are talking about the development in the field of commercial bank which is taken after the independence. So what we are doing, we are comparing the situation of commercial bank at the time of independence and nowadays. Clear? Whatever changes occurs in the field of commercial bank, that all are the development of the commercial bank in India. Now the question arises ki how these types of development happen for the commercial bank. Then we all know that in the time of independence, the number of the banks are very less in the market, and even with the number of banks, the business that is covered by the banking business, the geographical coverage you can say, that is also very limited. But with the starting of or with the commencement of economic planning, certain types of development started in the field of commercial bank. So many reasons are there for the development. It may be the liquidation and amalgamation of bank, that the loss making banks are going to be closed down, and the you can say the two loss making bank merged and started a new bank, or the loss making bank merged with the stronger bank. Along with this, the nationalization of Reserve Bank of India happened in the year of 1949 after independence. With this, the Banking Regulation Act 1949 is also passed. After that, our Imperial Bank of India, which is nowadays known as the State Bank of India, nationalized in the year of 1955. And with that, in the year of 1969, 14 commercial banks was nationalized, and in the year of 1980 another six banks were nationalized. That topic we have already discussed in the previous one, nationalization of the banks. In that we have discussed about the nationalization of 21 banks. And also with these all, so many structural changes occur for the commercial banking system, and the bank adopted some of the new strategies for the functioning of banking business. Along with this, that we discussed in last to last lecture, that the certain reforms that have taken place after the year of 1991. The topic is that the reforms in the banking sector in India, that we already discussed. So because of these all reasons, because of the liquidation and the amalgamation, because of nationalization of Reserve Bank, because of nationalization of another 21 banks, because of the nationalization of SBI Bank, because of the passing of the Banking Regulation Act, because of the structural changes in the commercial bank, and because of the new strategy that is adopted by the banking business, and along with this another that reforms which is done in the field of the banking sector in the year of 1991. These all are the reasons of the development of commercial banks. So what you have to do whenever you want to start this topic, in the introductory part you can write these all reasons. Clear? So after giving the introduction, then start with the development of Commercial Bank of India. The trends and the progress of banking in India during the planning period can be listed as I am going to show you. And what you have to do, just give the list and explain it one by one. The first point of the development is the increase in number of banks. Means at the time of independence and nowadays the number of banks or number of commercial bank is increased. Second, increase in the number of bank branches along with the bank. The branches of the bank is also increased. Then the growth of the bank deposits and its compositions means the total deposit with the hand of the bank is increased, and along with the composition which is made by a way of different accounts, it is also increased or it is also changed. Then the expansion of bank credit, the credit facility which is given by the bank is along with the deposit increase, the credit facility is also increased. Then improvement in investment portfolio. The investment which is to be done by the banks is along with the facility which is given by the bank. As now the bank is able to get the more deposit from the public, as we discussed in the third point that the growth of the bank deposits. Now the banks are having more fund with hand, so ultimately the investment activity via bank is increased. Then investment in IDR and CDR. IDR stands for the investment deposit ratio and CDR stands for the credit deposit ratio is also increased. Then the borrowing from our Reserve Bank along with this all, the borrowing which is taken by commercial bank from the Reserve Bank is also increased. And improved financial performance. Here, what is the measure of financial performance? Of course, the profit. So you can say the profit which is earned by the commercial bank is also increased. The next is the reduced regional imbalance. As we all are aware about that, at the time of independence, there's a number of banks are actually limited, actually low. But even though the regional imbalance is also there, that the limited bank is started in the area of, you can say in the posh areas or in the urban areas, not in the rural areas. So many regional imbalance are there which is going to be reduced somehow nowadays. And the last one is that the parity in the deposit and lending rates to reduce the unhealthy competitions. Now, so we are going to discuss these 10 points in detail to explain about the development of commercial banks. Now, one thing I want to say that here explanation part is very less. Here what the data is more. So what you have to do, increase the number of bank. How can you prove that the number of bank is increased? Of course you have to give the data that in some of the year the number of banks is this and then in some of the year the number of banks are this. How you can say that the increase in number of bank branches? Of course you have to give the data. So this topic is completely based on data. Clear? So for these topics, development of commercial bank in India, you have to learn some of the datas. And it is compulsorily to not explain only in the sentence form. With the example, you have to give the datas also. So it is you can say the requirement of this topic to learn the datas. Starting with the first point, increase in number of banks. Now, as we discussed, the number of banks of the commercial banks especially is increased after the independence. Now, here the bifurcation is given for the commercial bank about the scheduled bank, public bank, private bank, foreign bank, non-scheduled bank, regional rural bank. In the second paragraph, you can see that the data is given on the date of 31st March 2017. Then on that day, there were total 152 commercial bank, in which out of this 152, the bifurcation is given. Clear? 148 is the scheduled bank, 27 is the public sector bank, 21 is the private sector bank, 44 is the foreign sector bank, 56 is the RRBs, and 4 is the non-scheduled bank. So here 152 means 148 scheduled bank plus 4 non-scheduled bank. This is the total of 152. Here you can see the details that in the year of 51-52, number of the scheduled banks are only 94, but and the non-scheduled banks are 442. As you can see that in the year of 51-52, non-scheduled banks are 442, and in the year of 2013, non-scheduled banks are just 4. So we can say that now almost all the banks are working under the guidelines of RBI. Why? Because not so many non-scheduled banks are there in the market. But at the time of independence, the number of non-scheduled banks are more compared to the scheduled bank. As you can see on the first paragraph, that 442 is the non-scheduled bank and only 94 are the scheduled banks. But nowadays, the scheduled banks are 148 and non-scheduled banks are just 4 in numbers. So here so you can see that there is a phenomenal decline in the number of non-scheduled banks. It may be because of the liquidation and merger, as we discussed in the starting, that the development is taken place with the reasons of the email liquidation of loss-making banks and the merger of the loss-making banks with the stronger bank. So because of these all reasons, the number of the non-scheduled bank may reduced. So here just you have to give the data. Second, increase in the number of bank branches along with the banks. The number of bank branches is also increased after the independence. Here you can see that in the tabular form, I have mentioned the data. In your textbook, you will find these data in the form of paragraph. But to make it easy for you, I have prepared in a tabular form. So it looks good also, and it is easy to remember also. And at the mind of the checker, it shows a good impression also. So here you can see in the year of 1951, the total number of the branches of the commercial banks were 2869 only. But in the year of 2019, the number of the bank branches increased to 1,41,756. So there is a phenomenal increase in the number of the bank branches after the independence. Now here there is no need to explain about the reason, just you have to give the data that there is an increase in number of bank branches. Why? Because all the reasons we have explained in the introduction part himself. Clear? In the introduction part we have explained about all the reasons of this progress here at a one time only. Then third one is the growth of the bank deposits and its compositions. As I said that the number of bank is increased, the number of bank branches is increased. So ultimately the number of customer of the bank is going to increase. Ultimately the coverage, or you can say the geographical coverage of the banking business is going to be increased. If this is so ultimately you can say that the deposit with the hands of the bank is going to be increased. You can see that in the year of 1969, the deposit with the bank is just 4665, but in the year of 2018, it increased here 1 crore 17 lakh rupees crores. Clear? The amount is given in crores. So many increase, you can say a phenomenal increase, or you can say drastic increase, a drastic change in the data of deposits, and after the independence, and along with the deposits, the composition of the deposit is also changed. That percentage between the here composition means the percentage between the time deposit and demand deposits. Before the independence, generally you are able to make that the demand deposits are more compared to the time deposit. I hope you are familiar with the meaning of demand deposits and time deposit. Demand deposits are the deposit which is repayable at the time of demand of the customer. It means about your savings account and current account. And the time deposit is the deposit which is payable after a particular time period. You can take the example of FD, fixed deposit account. So before the rationalization, the proportion of the time deposit is less than the demand deposits. But nowadays the proportion is changed, or you can say the composition is changed. Now the people is also go for the FD. The people will also go for the demand deposits. Now the composition changed, and the proportion of the demand deposit is less than the time deposit. Clear? So this thing you have to explain here. Then what is the reason of the increase in the deposit with the hand of the bankers? So it may be very reason that ultimately after independence, the income of due to the industrialization in the India, the income of the public is going to be increased. Second reason, it may be that the number of bank and the number of bank branches is increased in India. The next reason may be that the special efforts for the deposit mobilization is taken by the scheduled bank by introducing so many innovative schemes for the savings and so many incentives to attract the customer. Why? Because after independence, you can say that the level of competitions is increased in the banking field. Clear? As the competition is increased, now the every banks wants to attract the customer, wants to grab the customer, and also wants to retain the customer. For that, a certain types of incentives were given by the banks to the customers. Along with these incentives, the certain measurements is also taken by the Reserve Bank of India to safeguard the interest of the depositors, or to you can say that to protect the interest of the depositors. We are going to discuss about the deposit insurance scheme in detail in the next semester, that in these types of insurance scheme, what the basically mean by this scheme, that's up to a certain percentage the deposit which is given by customer to the bankers are safe. Clear? Generally, this amount is 1 lakh rupees. If you have handed over 1 lakh rupees to the banker, so your deposits are safe. If the bank is closed down, then also the Reserve Bank is there to give your deposits back. So certain measurement is taken by the Reserve Bank of India to give the protection to the depositors. So along with this, you can say the trust of the depositor is increased. So now the person is ready to deposit more amount in bank also. Clear? So these all are the maybe the reason of the increase of the deposit with the bank. The next is the expansion of bank credit. As we discussed that number of bank is increased, number of bank branches is increased. Along with this, of course, the customer of the bank is going to increase. If the customer is increased and the geographical area coverage is increased by the banking business, then of course the deposits of the bank, or you can say the deposit which is done by the customer in a bank, is increased. If the banker is having more money, so of course the banker is able to lend the more money. Yes, so this is a vice versa situation. If deposit increased, then the bank credit level is increased. If deposit decreased, the bank credit level is decreased. Clear? So after the post nationalization period, means after the nationalization of the banks, here we are talking about the nationalization of 21 banks plus the nationalization of RBI plus the nationalization of SBI. After the nationalization of these all banks, the expansion, or you can say the bank credit given by the banks, will be increased. Now, how it is increased, you can see the table that in the year of 1951, the bank credit is just 580 crores, but in the year of 2018, it is 86 lakh 50,714 crores. So this is the, you can say, phenomenal increase in the bank credit which is given by bank to the customer for a different objective. We are not going to bifurcate this credit into the productive objective or unproductive objectives. We are just taking the credit as a whole. Then next is the improvement in the investment portfolio. As we also discussed about that in the performance of the commercial bank, that commercial bank is going to invest the public money somewhere, generally in the government securities and other secured securities, which are not government securities. Clear? Why? Because the commercial bank wants to take the low risk, because the commercial bank is investing the money of public. The commercial bank is not dealing with their own money. They are dealing with the public money. So they wants to take the low risk. The second point, For the investment, this is a function of a commercial bank to invest the money, but for the investment they require money also. If they are having more surplus, then only they are able to invest. So the as the we have seen the past data that after the nationalization, the composition of the bank deposits and the amount of bank deposits with the bank is increased. So now if the bank are having more fund in hand, or after giving the credit, if the surplus is more, so ultimately the banks are able to give more able to do more investment in the securities. So here the data are given about the investment done by the commercial bank in the year of 1951 comparison with the year of 2014-15. So you can see that in the year of 1951-52, the investment which is done by the commercial bank in other securities, or you can say government securities, is just 296 crores. But in the year of 2014-15, it is increased to 25,72,350 crores. So this data shows that yes, there is a investment portfolio of the bank is increased. Then this is about the increase in the ratio, cash deposit ratio, investment deposit ratio, and credit deposit ratio. Clear? What do you mean by cash deposit ratio? Out of the total deposit, certain proportion of the cash which is maintained by the bank in a liquid form, that is known as the cash deposit ratio. Here you can see the data that in the year of 1991, the cash deposit ratio is 13%. But in the year of 2014-15, it is reduced to 5%. Now the question arises whether it is profitable for a bank or not. Of course, it is a profitable, or you can say the favorable for a bank. If the cash deposit ratio is going to be decreased, means the idle cash with the bank is going to be decreased. Why? Because as I already said, the composition of composition of deposit is changed. Now the time deposit is more than the demand deposits. So ultimately now there is a no need to maintain more cash in hands. So of course the CD ratio, you can say the cash deposit ratio, is going to decrease. Why? Because now the people will go for time deposit more compared to the demand deposit. So to as a bank or as a banker, no need to maintain the high level of liquidity. So of course the cash deposit ratio is going to be reduced. So it is a favorable situation for a bank. Next, about the investment deposit ratio. You can see that the 38.5% is the investment deposit ratio in the year of 1991, but in the year of 2014-15, it decreased to 29.2%. As we seen that the total deposit is increased with the hand of the customer, with the hand of the banker, the cash deposit ratio is reduced, means now there is no need to maintain the more liquidity. No, deposit is increased, means banker is having more fund. CD ratio is decreased, means no need to maintain more fund. So where the fund goes, if the banker is not investing the funds, as the record says, the investment deposit ratio is decreased. Clear? So where the fund goes, ultimately the banker is going to give the credit to the customer. So you can see the third one, that the credit deposit ratio is increased. In the year of 1991, it is just 62.9%, but in the year of 2014-15, it is 76.5%. So you can see that the what do you mean by investment deposit ratio? Out of the total deposit investment done by the banker, suppose if the 100 is the total deposit, then out of 100, 38.5 rupees is invested by the banker. What do you mean by credit deposit? Out of the total deposit, the amount of the money which is lent by the banker, it is known as the credit deposit ratio. So the data says that the first thing, cash deposit ratio is reduced. So the second thing, investment deposit ratio is reduced at a, you can say not so much, but at a certain level it is reduced. The third data says that the credit deposit ratio increased so much. Clear? So this all about the development of the commercial bank according to the, or on the basis of the, you can say, ratios. Along with this, the borrowing which is taken by the commercial banks from the Reserve Bank of India, it is also increased. This type of borrowing is not free of cost. You have to pay the interest rate. What do you mean? What the interest rate called? that if as a commercial bank you have taken a loan or you have taken a borrowings from the Reserve Bank of India and you have to pay the rate of interest, so that rate of interest is known as the repo rate. Clear? And if the Reserve Bank has taken the borrowings or the land, the money from the commercial bank, so it is known as the reverse repo rate. I hope you are familiar with the repo rate and reverse repo rate. Do you know what is the current repo rate and what is the current reverse repo rate? So this is the homework to you to find out the current market repo rate and reverse repo rate. If you are not able to find out, then I will ultimately explain in the next lecture. So you can see the data that the borrowing which is be taken by the scheduled bank or the commercial bank from the RBI is in the year of 1951 it is just 12.4 crores, but in the year of March 2015 it is 1,58,250 crores. So why this is so? This is not shown an adverse situation for a bank. Why this is so? Because the number of banks are increased, number of bank branches are increased, so the maintenance expenses, the establishment expenses were increased. So because of that reasons, the banker has to borrow the fund from the Reserve Bank. This is not showing any adverse effect. Clear? Ultimately, if you find the proportions per bank or per branch, so it is going to be same somehow. Yeah, the total borrowing is increased because the number of banks and the number of branches are very increased. This is not showing any adverse effect. I'm repeating again. And the next one is the improved financial performance by the bank. As I already said that what is the measure to what is the tool to measure the financial performance? How can we say that the bank is performing very well or the bank is not performing so much? So the tool to measure the financial performance is ultimately the profit of a bank. So if the profit of a bank is increased, so we can say there is an improvement in the financial performance of a bank. If the profit is decreased, so we can say the bank is running in a loss. So what the data says that in the year of 2000 and 2001, the net profit of the commercial bank, total commercial bank, is it is not about the scheduled bank or unscheduled bank. It is just about the scheduled bank. The total profit which is earned by the scheduled commercial bank is in the year of 2000-2001 is 6,403 crores, but in the year of 2013-14 it is 80,000 crores. So ultimately, the data says that after the independence, due to the reason that we have discussed, because of this all reasons, now the customer is able to attract more customer, more deposits of increase, the credit facility given by the bank is increased, investment is also increased, ratio is decreased, but ultimately total amount of investment is increased. So because of this all reasons, the banks are able to get the more profit. Why? Because the profit of investment is increased, the profit earned by the banker via lending activity is increased, and ultimately the coverage, geographical coverage by the banking business is increased, number of customer is increased, total deposit is increased. Because of these all reasons, the financial performance is well, or you can say the net profit is increased or it is raised by of the commercial banks. Then the next topic is the reduce the regional imbalances. Here regional imbalances means, of course we are talking about the rural areas and urban areas. Clear? At the time of development, it is the duty of a bank to focus to reduce about this regional imbalance. Not only focus on the urban areas to cover more profit or to earn more profit, but they have to work for this objective also. So data says that in the last March 2017, the RRB Regional Rural Bank has total 21,343 branches, but out of these branches, the 40,954 branches were established in the rural areas only. Clear? So, what is the limitations that a large part of branches of the scheduled commercial bank were found to be functioning in the urban areas, or we can say in the metro cities, while the rural areas and the semi-rural areas are received very less attention by these types of the scheduled commercial banks. But this limitation is reduced by the RRB, Regional Rural Bank, that come into the existence in the year of 1975, especially with the objectives to reduce the regional imbalance or to develop the economy of the rural areas. And of course, the this type of bank performs very well to reduce the regional imbalance. So this topic is all about the RRBs. Clear? This is the limitations of the scheduled commercial bank, that these types of bank are not able to reduce the regional imbalance. So for that objective, especially the RRB come into the existence, and the data says ki yes, the RRB started functioning more and more in the rural areas for the economic development of the rural areas. And the last point for the topic is parity in deposits and lending rate. As we discussed that after the independence, the number of the banks is increased in the market, or the number of branches also increased in the market. With the increase of number of banks, the banks started giving so many incentives to the customer to attract the customer or to retain the customer. So ultimately, it increase, you can say, an unhealthy competitions between the banks. Clear? Healthy competition is good for the development of a commercial bank, but unhealthy competition is not good for any areas. So to prevent these types of unhealthy competition, a step taken by the RBI is that now the banks are free to determine the lending rate or the deposit rate, but under a certain limit, and that limit will be decided by the RBI. What is this limit? You can say the flooring and the ceiling limit, clear, of the rate of interest. That what maximum a bank can charge and what a minimum the bank should charge. This minimum and maximum limit for the rate of interest on deposits or on the lending activity is decided by the RBI. But in some types of adverse situation, now you can see at the time of pandemic, most of the decision is taken by the RBI, and all the banks has to follow these decisions. So RBI is trying to reduce these types of unhealthy competition from the market and try to bring the parity in the deposits and lending rate of all the banks. That we all aware about that. If you want to invest in savings bank, so of course there's a minor difference between the rate of interest of different bank, but this difference are minor difference. It is not a major difference. This is not so that one bank is offering 5% and the second bank is offering 10%. Of course not. There will be a minor difference between the rate of interest of different banks. Clear? Why? Because this is so, because the flooring rate and the ceiling rate is already decided by the RBI, and the banks has to perform between these two limits. So ultimately, RBI tried to bring parity in the deposit and the lending rates of all the banks which is working in the market. I hope it is clear. So these all are the points of the development of the commercial bank which is taken in India after the nationalization. Clear? What we did in today's lecture, we have started with the outline of the last lecture, that what we did in the last lecture. Then we have started the topic progress of the development of the commercial bank in India. Before discussing this topic, we have discussed the reasons which are responsible for the development of commercial bank in India. I have not mentioned the reasons in the PPT. You can refer it by your own also, or just you can follow my words, whatever I have explained in this lecture. These all are the reasons of the development of the commercial bank in India. After discussing the reasons, as I said, you can mention the reason in the introductory part of this question. If this question is asked in the examination that explain the development of commercial bank in India, so before explaining about the development, you have to give in short the reasons of the development. So I explained all the reasons which are responsible for for the progress or for the development of the commercial bank in India. After explaining the various reasons, we have started with the development of the commercial bank. In that, we have discussed with the 10 points. That first point is the increase of number of banks, ultimately the total number of banks which are working in India in the form of the scheduled bank, non-scheduled bank, public sector bank, private sector bank, foreign bank, regional rural bank were increased after independence. How it is increased? So you have to give the details. Then we discussed that not only the banks, with the banks, the number of bank branches were also increased in India. Of course, ultimately, again, you have to give the details for this. Next, we have discussed after the independence, the bank deposit, total number of deposit with the bank is increased or total amount of deposit is increased, along with the composition in the form of the time deposits and demand deposit is also changed. Now the people will go for time deposit more compared to the demand deposit, but before the independence the demand deposit is more than the time deposit. So deposit, total amount of deposit is changed, along with the composition is also changed. Then we discussed about the reasons which are responsible for the development or for the growth of the deposits, or for the increase of the deposits, or for the increase of the amount of deposits with the bank. Then we have started with the fourth point, that is the expansion of bank credit, that the credit facility we are given by the bank is increased after the post nationalization period. And again I have mentioned a table for it. Then we have discussed about the improvement in the investment portfolio. The total amount which is invested by the banks in various sectors, especially the government securities and the other securities which we already discussed in the previous lecture. Clear? The types of securities is also increased, or the investment is also increased after the independence. Then we discussed about the three ratios that shows the development in the field of the banking sector or the commercial banking sectors, that are the CD ratio, cash deposit ratio, and credit deposit ratio and investment deposit ratio. The cash deposit ratio and investment deposit ratio is declined, but the credit deposit ratio is increased after the nationalization or after the independence. Then we discussed about the borrowing from reserve banks. Ultimately, the borrowing taken by the commercial bank from the RBI, from the reserve bank, is also increased. Then we taken the point of the improvement of the net profit of the commercial bank. Clear? Which shows the performance in terms of finance, that the net profit of earned by the bank in the after the nationalization is also increased. Then we have discussed the topic reduce regional imbalance. In for that objective, especially the RRB's regional rural bank come into the existence in the year of 1975 to develop the rural economy, and how they are able to perform these functions. We have also discussed this point with the help of data. And lastly, we discussed that the RRB took some of the steps to bring the parity in the deposits and lending rates of all the banks, to prevent the unhealthy competitions in the market, or unhealthy competition among the various banks which are running in the market. So with this, the topic is over. We are going to meet in the next lecture. Till then, stay home, stay safe, start learning. Have a good day. Thank you.